Welcome to the CPM Customer Success Podcast, where we help Office of Finance leaders enable an exact solution to enhance their corporate performance without spending countless nights and weekends in the office. Hi, I'm your host, Andy Smetana from Nova Advisory. Nova Advisory is a 100% OneStream professional services diamond implementation partner. We help OneStream customers and prospective OneStream customers get the most out of their OneStream investments. For CPM Customer Success listeners, we now have a weekly email newsletter to keep you informed on the latest CPM Customer Success news. By subscribing today, we'll keep you informed on episode releases, including customer success stories, OneStream interviews, and capabilities to keep you up to date about OneStream's unified platform for finance. You can check that out now at Nova Advisory's website, novaadvisory.com/podcast, and subscribe to the CPM Customer Success Podcast newsletter today. Today's episode is all about Oracle's Hyperion Financial Management, or HFM, and what its sunsetting and deprioritization means for finance teams. We'll cover the facts about Oracle's support timelines, the risks of staying on HFM, a high-level roadmap for switching to OneStream, and the benefits CFOs and finance teams can expect from making this move. By the end of this episode, you'll have a clear understanding of why so many organizations are leaving HFM behind and how Nova Advisory can guide you through this transition. So let's dive in. There's a lot of confusion in the market, so let's start by clearing this up. Premier support for HFM version 11.1.2 ended in December 2021. So if your organization is still on 11.1.2, you're now on what's called sustaining support, which means there's no new fixes, there's no new certifications, there's no enhancements. Essentially, you're frozen in time. Oracle's so-called continuous innovation version, which is Hyperion EPM 11.2, it does have extended Premier support. And in fact, Oracle is committed to support through at least 2033 and possibly even as long as 2036. But here's the catch. Innovation is minimal. Many modules were deprecated, and Oracle's made it clear that its roadmap and focus is on Oracle Cloud EPM, not HFM. If you're on 11.2, you're on it for life support. Either way, Oracle's energy and investment dollars are going into cloud EPM solutions and not HFM. So yes, HFM may still run, but it's not evolving. And for finance leaders, that's a dangerous place to be in. So what happens if you stay on HFM? Let's talk about the risks. So first off, there's stagnant features and technical debt. With no premium support on 11.1.2, you're locked out of new enhancements. 11.2 is largely just bug fixes. And meanwhile, your underlying operating systems, things like databases and your Microsoft Office integrations, they keep evolving, and that creates compatibility risks. Your second risk, the rising total cost of ownership. HFM customers report costly, complex upgrades just to keep the lights on. And as the stack ages, maintenance consumes more of your finance IT budget without adding business value. Your third risk with HFM is talent scarcity. Fewer and fewer administrators and consultants want to work with legacy HFM solutions. That drives up costs, it slows down issue resolution. Your best finance talent doesn't want to spend their career on a dying platform. And finally, strategic misalignment. Oracle's focus is clear, and that's Cloud EPM. If you stay on HFM, you're tying your finance strategy to a product with little future innovation. The bottom line, staying isn't neutral. It carries growing risks, higher costs, and shrinking talent availability. So if you're on HFM 11.1.2, you really have three options. You can upgrade to HFM 11.2. This gives you your long-term support, but little innovation. It's a life support option. It's fine if you want to buy some time, but you'll face another migration eventually. Your second choice is you can move to Oracle Cloud EPM. This is Oracle's preferred path. but it means adopting another fragmented ecosystem with separate modules for consolidations, planning, and account reconciliations. Your integrations remain a headache. Your third choice is you can modernize. This is the option more and more CFOs are choosing. With OneStream, you get a unified platform for consolidations, close, planning, reconciliations, reporting, analytics, and AI for finance. There's no more silos, there's no more fragmented upgrades. So let's bring this to life with our CPM customer success story of the week. This is a century-old global apparel manufacturer. They've got dozens of brands and hundreds of entities. They found that their legacy HFM stack couldn't keep up with their scale and complexity of their business. They faced compatibility issues, support problems, and frequent downtime during critical consolidation and close processes. Upgrades to the previous system were costly and risky. They often required consulting and lengthy project plans. As their financial systems manager put it, every time we tried to do an update, it was a full-on project needing consulting with weeks of upgrade support. We had a very sizable project cost. So they selected OneStream, and despite the scale of their operations, they went live in just 6 months. So let's talk about what was included in their consolidation reporting footprint. They had approximately 1,200 accounts, 137 legal entities, 350 locations, 250 departments, almost 200 brand codes, 8 local currencies with full intercompany eliminations included, and they processed almost 3 billion data points. They gained dramatically improved system stability. There's no more downtime during period and close. They enjoyed much better data visibility with drill downs across the brand, location, department, and geographies. They can now automate intercompany eliminations, cash flow reporting, consolidations, and foreign currency translations. Administrators no longer spent time patching or restarting services. IT no longer needed to babysit their financial applications. So what they got overall was a flexible, extensible platform. OneStream allowed them to plan future expansions, account reconciliations, budgeting, forecasting, planning, all within the same unified system. In short, what was previously a painful, high-maintenance, risk-laden process became a streamlined, stable, high-visibility system with financial data and operations unified under OneStream. And for finance leaders, that's the difference between a patchwork consolidation and a modern, scalable finance platform. So how does a switch from HFM really work? Let's break this down. First, start by quantifying the pain. Look at your last HFM upgrade, proposals, and support tickets, and compare those costs of just staying afloat with HFM against the efficiencies and innovation OneStream brings. Onboard a OneStream partner like Nova Advisory. As a OneStream Diamond implementation partner, we focus solely on OneStream solutions and have several former HFM architects that have rebadged and are now OneStream architects. You'll complete the following steps with the help of your partner. Inventory your HFM environment. Metadata like entities and accounts, rules, intercompany logic, journals, integrations, and reporting packs. Then design your target model in OneStream. Unlike HFM, where everything was forced into a consolidation structure, OneStream allows for a truly unified model. So consolidations, planning, and reconciliations, they're all under one roof within the platform. Here's where the real work can begin. You'll convert your HFM metadata and rules into OneStream business rules. You'll replace your FDM integrations with OneStream load workflows. You'll connect your ERP systems, subledgers, and HR or CRM systems if those are applicable. You'll deploy OneStream's financial close solutions, things like account reconciliations and transaction matching to tighten your close process. Then you'll run parallel closes, usually 1 to 2 cycles, to validate your numbers. You'll test currency translations, intercompany eliminations, and consolidation performance. Then you'll cut over, provide hypercare training, and roll out OneStream dashboards, narrative reporting, and if you're ready, AI-powered forecasting with Sensible AI. Change management is key here, so make sure your team feels empowered, not burdened. And the key message, this isn't a rip and replace, it's a phased journey of transformation. So let's review the benefits of moving to OneStream. What do organizations gain after they leave HFM behind? Well, first off, they gain a unified platform. There's no more juggling multiple modules, reconciling data across tools. They'll achieve faster cycles. Organizations report materially shorter close cycles and improved reporting turnaround times. You'll achieve better governance. Things like audit trails, drill back, and integrated reconciliations, they give finance leaders confidence in the numbers. You'll have an innovation runway. OneStream isn't just about today's close. With solution exchange solutions and AI capabilities like sensible AI forecasting, your finance team is positioned for the future. You'll have narrative reporting, predictive forecasting, and beyond. In short, you don't just escape HFM's stagnation, you leap forward. At Nova Advisory, our message to finance leaders is this: don't wait until HFM's limitations force your hand. Be proactive. Use this moment to modernize, simplify, and future-proof your finance function. Thanks for joining us for this episode of CPM Customer Success. Reminder to check out the CPM Customer Success weekly email newsletter to stay informed of the latest CPM Customer Success episodes and OneStream news. You can check that out now at the Nova Advisory website, novaadvisory.com/podcast, and subscribe to the CPM Customer Success Podcast email newsletter today. Thanks again for listening, and I'll catch you next week for another episode of CPM Customer Success.